So 8:30 to 9:30, looking for a Judas swing. Some sort, we got a Judas swing below these relative equal lows. SMT with ES here. So good for bullish movement. We got buy side up here. So that's the short-term target. I mentioned that I wanted to see a 5-minute gap form, which we got one right here in the displacement leg. So preferably if we can come down and fill this right during the macro time, can look at that as taking a long and then going up to the London high 25 points or so. That'd be preferred. But we'll just wait and see. We'll mark this bisi out once it closes. Still got about a minute or so. Yeah, a minute or so till this candle closes. Then we can look on left side chart. We got a breaker in here. Low, high, lower, low. Extend that out. Should see a pretty strong reaction. We could actually tap back into this inversion gap over here. If you look at the 5-minute chart. If I extend this out, only really buying in here. So if we were to drop below, we could see it fill completely. Or this is also could be left open as a breakaway. So we got to see where the candle closes. If we just wick into it and tap into the order block over here across, that'd be preferred. If we come all the way down and close right at this premium or discount end of the gap, we're accepting that. We're allowing that to happen. Anything past that, I wouldn't really like it at all. So waiting for time here. Still got 6 minutes or so. So ES came back, filled there. You can see the price action at ES too is showing it's going to be low probability today. Whenever we open here at 8:30 or even going to 9:30, whenever we see price like this, lots of gaps in between the candles, a lot of volume bounces, a lot of wicks back and forth. Just looks like barcodey back and forth. That's price action you don't want to be trading. Obviously, we'll make the exception for today, just for demonstration purposes. But normally when you see this kind of stuff, it should be showing you, yeah, you don't want to be touching it. So there's the 5-minute gap. Mark this out now. Screenshot this really quickly. Now we're still waiting for time. I know I just dipped into it. And if we miss that trade, it's fine. But preferably we want to wait for some sort of time element. Now, if it starts running away from us, then you could look for 10 a.m. potentially as a retracement entry. Unless ES shows a willingness to move lower and DXY also wants to move higher at the same time. Then we could be looking at possible reversal at 10 a.m. But you can see indices paired up and DXY starting to climb here. So if we continue to climb, I'd be very careful going long anything further than 20 points or anything further than this swing high on NQ. So we're getting reaction here off the bisi. Now, normally, if you want, this is your ends model. If you're familiar with the ends model, you wait for a liquidity sweep between 8:30 and 11. Probably Judas taking out some relative equal lows in the 5 or 15. Look at the first 5-minute gap to form. Take that as your entry. So this is like your standard, I guess, model. Still got 3 minutes. Now we're still allowing for a trade back into the discount end of this 5-minute gap. Okay, if you want to fill the rest of this inversion over here. So if we mark this out, you see the overlapping portion right there. DXY still moving up there. And if you look at ES's highs, took those out, and NQ also swept out the high right here. So I'm still SMT relative to the London high, right? So if you look over at, let's go to ES. ES just purged their London high. Once it loads, you'll see the purple line over here. There we go, purple line. So we got to be careful, right? If we don't see a bounce right off this inversion gap, I'm going to assume that we're going to move lower. Just for the sole purpose that DXY is moving up. So there's your fill like we wanted to see all the way down. I'll watch for this 5-minute candle closes, okay? That's 3 PD arrays right there. We got the bullish breaker in here. We got the inversion gap, and we have the bisi. So any closure really below one of those, or all 3 of them, would show that we're very weak comparatively. Because when you have 3 PD arrays stack up like that, it's a pretty strong kind of area. So we're closing on the 1-minute candle. We're closing below the 1-minute gap. Closing below, closing below. We have a tiny portion in here. We just tapped into the bullish order block over here too on the 1-minute. So 5-minute candle closure. As long as it closes in the 50%. So if I mark this out with 50%, you'll see. Now, if you're looking as a very confirmed entry, you could look for a change in state above these consecutive down closing candles, right? So if you put a candle closure above there, that would be optimal for the macro. But you can see, look at that perfect closure above the gap. I'm liking it so far. Looking at taking a stab long. Assuming we're going to close above there, 20 points. I told you on Monday, we really don't want to be doing anything more than scalping, especially with all the indices kind of misaligned here. So I'm going to put stop loss at the low. You got multiple PD arrays. And if you close above that CISD, that's perfect. Entered a little early, but since we already started to run away, I don't know if we're going to get a retracement back into the gap again. So I'm fine with quickly just getting in, getting out. Obviously, if it comes and stops us out, that's perfectly fine too. So we're looking at London high as the first target, I guess. Slightly above there. Could also take one off, I guess, at the New York high too, if we just purge that and trade back lower. So watch to see how we fill. There's a gap, tiny gap right there. Okay. I can see the result of me entering too early. Didn't get the closure above the CISD. But if this gap holds, this I guess this is technically a bullish order block. You could use it as a bullish order block, but the gap holds. We have this last line of defense here. Finally going to get out of January PA soon, though, which is good. So hopefully after this last week of volatility going into the rest of February, we should see some pretty clean price action, at least in the New York session. Less of this London expansion and PM session expansion, and just more of classic New York expansion or even reversal going into New York. Just clean moves. So we filled this with, if I remove this really quickly, got everything we wanted to see, right? We came down, filled the rest of this gap with selling, right? With just this wick back, closed, See the 1 minute candle closure all the way down. Fill the gap on the 5 minute. We tapped into the bullish order block down here just slightly. So if we don't get speed out of that up to the TP, then it is what it is, right? But so far this 5 minute gap is holding. But realistically, there isn't really much of a reason why we need to be trading this far low. Like I feel like the stop's going to be taken. We have a gap here, didn't hold. We got the CISD here that didn't hold. Even forgetting this one. CISD didn't here, didn't hold. Here didn't hold. So you can expect the low to be taken out. Although the candle body did close right there. Let's take a look at the rest. Yes, a little bit more bullish. We got an actual change in state right here, respecting the order block. We still have PM high above. Volume's trading up. So all the other ones are trading up except NQ. CFTXY is starting to move lower. If we can move below these VIs, that'd be clutch. So 20 points above the CISD is like right up to that high. So entered a little, it's definitely a poor entry. You need to see a closure above here. If you see a closure above here, I would assume our bias is right. Send a screenshot really quickly to your predictions chat. By the way, this is not, if you're new here, this is not a signal service. Okay, so I'm not vouching for these trades. I'm not telling you should copy them in any sense, but these are just, yeah, if you want to go full margin long on demo, by the way, go ahead. But yeah, these are just for teaching purposes, right? Just trying to showcase the different models that are available to you. Someone requested, if you were on the live stream on Saturday, you know about the 15-minute model that we're back testing a little bit. I think after this week, I know there's a lot of volatility this week, so I don't want to be touching it too much. But next week, if I get more backtesting data on the subject, then I'm probably going to post a video just showing like 5 or 6 different live executions just using that 15-minute model. It's funny because as soon as I posted that video, ICT comes out, it's like, just wait for the books. Oh, there's going to be all these 15-minute model mentors coming out. I never said I was a mentor. I just wanted to see if I could crack the code. So, I mean, if it looks reliable live, then I feel like it'd be a model in its own. But multiple wicks down here where you can see the candle buys are still closing pretty bullishly. Take a look at ES. ES popping up. It's a good sign. YM popping up. Let's put an alarm up here too. Make sure they're taking out their old highs. We want ES as well to clear above here. You can see NQ is the only weak one. It's kind of frustrating. And we still have not seen a closure above here, right? Now, preferably since we're consolidating here, we actually could see a Judas swing at 10, which is a problem. We could see a stop run right at 10 o'clock, unless we see expansion. If we see expansion in the next 3 minutes, form a fair value gap, I mean, trade into that fair value gap. Otherwise, I'm kind of anticipating that we take the stop and then run all the way to buy side. Right, if we're looking for a reversal, I don't really like it too much, to be honest. I'm going to close this out early. Reversal at 10, right? So we could come down here, sweep it, and then pop all the way up. Which I'm not going to widen the stop. Just going to take it off here, especially since, yes, it's dumping off. YM's dumping off. So watch, now we're going to take the stop. Going to pop it. This next candle. There you go. So there's your stop out, but just closed it beforehand. Send a screenshot to your future trades. So you can see the result of me entering too early. We didn't get the closure above, and it got stopped out. So it's good to have. I feel like these are typically your best kind of entries here is when we have a higher time frame narrative, so the 5-minute gap holding in some sense, and then you want to see a lower time frame change in state, which is what we see on the weekly profile too, right? We see a 4-hour gap or something traded into on Tuesday, and if you want to use your classic expansion for the week, you want to say Tuesday creates the low of the week or something like that. When you see the 4-hour gap is filled, to confirm it, you want to see a 1-hour change in state right here at this high. So what you can do is you can just wait for candle closure above the last down closing range or this up closing range and a tap back into it to confirm that's a CISD, use it as your entry, and then go long. But you can see here, didn't get a closure above. I just anticipated this was going to close here, which is normally what you see when you see this larger wick and we're displacing quickly. You see the closure above. So it's not like I was just entering off the momentum. I wanted to see it close above this and then wick back into it and form some sort of breakaway gap. So this I assumed was going to be your breakaway gap since we're reacting off a 5-minute bisi. Anyways, so here's our sweep of the low right at 10 o'clock. ES is just chopping around. There's really nothing here. YM just filled their gap at 10. Right. There's your Monday PA, right? The choppiness. And displacing all the way back down. So still good stop management, I think. Right at the low, didn't take it, and then we entered or exited right before, took it out. So whenever you see yourself, if you have a proper stop, right? If you ever see yourself widening the stop, unless you're like your stop was placed in the wrong position, right? There's really no reason why you should be widening your stop, either on a short or a long, to try and accommodate for price to dip lower. Obviously, unless you didn't see the 3 PD raise, but if your stop is at 3 PD raise and you feel comfortable about it, and price starts closing or attacking near that stop, do not touch the stop. You either close it out beforehand and let it completely reverse without you, or you let it take its stop, do its thing, because you pay the stop to do its job, right? You have a stop there and you pay it well to do its job. So let it do its job. You're not gonna move the stop to allow your thought about the market play out over what the actual market's telling you. Okay. So let it do its job. Obviously, when you get more comfortable with it, you'll know when the stop is actually going to be taken if your trader's idea is wrong. But that also just comes with practice too, right? On NQ1 hour, we did close above that sibi inversion fair value gap, also invalidated possible run down towards the 1-hour bisi. Let's take a look. Oh yeah, right at 17 and 523. Could see it, especially with the SMT at the highs now between ES. Let's mark it out actually. Talking about this gap right here. Ideally, actually down to here, but we'll mark this out for now. Oh, we got a 1-hour VI too. I'm interested in that. Is this the new week opening gap actually? Oh, it is. Okay, new week opening gap right here. That's why. So watch the new hog down here. Normally I have it marked out. I'm sure it's not. Yeah, if you look over here. I'll skip trading this week. Lol. Yeah, I agree. It's gonna. I mean, today's gonna be is bound to be the worst day. Tuesday should be fine. Wednesday morning session may be okay. Thursday, I don't know. Friday, like if I had to say 2 days that are for sure gonna be solid, Tuesday, Friday, probably only 2 days that are gonna be good this week. Let me see the price action right here already. Like you would assume on any normal day, this long should play out, right? We have SMT at the lows. We've got a liquidity sweep right at 930. We've got expansion. We got the ends model right with time. We got the 5 minute gap. We got a breaker on the 5 minute too. That should always play out like that. That's a very high probability setup, right? Very, very high. So the fact that we're chopping around here, displacing lower in DXY, I'm sure is still doing its thing. Shows you how poor the price action is, right? Yeah, it's chopping around. I told you shouldn't be touching it. This is what builds up your patience and your mental model, right? So knowing, okay, there's our 950 macro. We had a very, very clear high probability trade and it still stopped us out. Doesn't mean there's anything wrong with the model. It just means that the probabilities are low. That's why you still have to have a stop. That's why you still have to have rules in place where if you take 2 losses or something like that, you're done. Because sometimes you won't see it's low probability. Sometimes you just want to impose your will onto the market and you think you're right every single time. But in these cases where we have high probability setups, they still play out. Then you still have to follow the same exact rules. Still have to reduce position size. Still have to be careful about taking another trade because a lot of times after you take that first or second loss, you're going to switch into an emotional side of trading instead of the logical side. Which that's why I think it's good to have a limit on how many trades you have to take. Don't have like a mental note. Okay, I'm only going to take 3 trades. Have it written down in your rules. This is how many I'm going to take. And if you take a loss, you reduce. For me, it's two losses. Really, it's 2 trades for the day. 2 wins, 2 losses, 2 break-evens. That's it. So I know if, like in this case now, preferably we'd switch to MNQ and then drop down to a either 50% or around 50%, whatever the max loss of the previous one was. So in this case, if it was 20 points, then you drop down to anything that would support about a 10-point stop loss on NQ or 20 points on MNQ with 5 contracts. Weird price action, don't like it. I agree. This is very, very weird. Now we have a bearish breaker in here. Large 5 minute gap in here too. Like we have SMT on both sides of the market between here and up here. Tiny 1 minute gap here. And do you see 10 a.m. doing anything high probability? No. Not at all, right? No retracement or no reversal. Like if looking at just like this, it would make sense, right? I told you we possibly could sweep it at 10 and then go all the way up to buy side. That's what you want to see. Okay, we have relative equal lows, take it out 10, and then fly up. But displacement down is not what you want to see. Watch this gap here. I had this one marked out because we are in line with a breaker in here, right? High, low, higher high, lower low. So we're going to see how this sibi is respected. If we were bullish, that one of our IFVG should have supported the price as the hourly candle closed above. This one right here. IFVG, if you extend that out, yeah. I mean, the fact that we closed above. Oh, this one right here. I see. Extend that out. Yeah, did we close above? Yeah, we did. So I would actually prefer if this down closing range right here was used as support. So not the IFVG itself, but the order block that was formed inside the IFVG. Okay. Or even this order block right here. which I mean, we're holding for the most part. It's just wonky. That's why I mean, AM trades economic, what is it, the economic calendar analysis, whatever this one right here, the one that someone sent me last week. This video right here is super, super powerful. Whoever sent that to me, I appreciate it. But I just watched it yesterday, took some notes on it. Solid stuff in there. If you want like a clean, which day do I trade based on the economic calendar? Which day is high probability when New York is going to expand? How do I avoid these kind of days? All that is just in that one video. There's technically 6 or 7 different weekly profiles that ICT is given, and those are very precise ones. But the 3 that he has in that video, I think, is really all you need. Obviously, if you want to be more accustomed to everything and the different variations, then watch ICT's videos. Nothing will replace that. But you want a very simple one, simple rules to follow. That's the video. But really, if you look at the macro time right here, we'll screenshot it when it's over, but you can look at it quickly. And look, what YM is taking its high right now. Very, very weird price action. Right, we're misaligned. DXY, I'm sure, is now dumping off. ICT took a sell off that consolidation in the bisi marked out. Of course he did. Why wouldn't he? I mean, we do have an order block right here, technically. Close below the order block, tapped into it. Maybe I'm sure that's probably what he used. I mean, look at the macro. Really nothing in there. I would have traded it at all. I mean, if you're looking at it in hindsight, you can actually see that all of the up closing candles in this range were held, right? Up closing didn't close below, but we closed below. So this is what I mean by each candle in an consecutive order block will be used as an actual order block. Okay, so in this case, we have this, right? Okay, so look, from the top, we've got order block range in here. We close below it with this candle. So it should be respected in a expansion move. Respected here. This candle now closes below. Okay, so both of these candles become the next order block, right? So you don't want to see any closure above that order block. Taps into it, candle closure staying within the gap. Now this candle, these 3 candles here, we don't close below both of these right in here, right? We don't close below both of these order blocks. Instead, we just close below this one up closing candle. So you can reduce it to this. You can see price comes up, closes into here. Then we see closure below. Then you can take this entire order block or the previous order block range. You can see we close up into it. That's your propulsion block technically too, right? And then you can see the perfect close below, wicks up into it, propulsion block, and we send it all the way down. So when you have multiple candles like this works for breakers, this works for anything. Let me actually send a screenshot of this to macro view. I know it's a hindsight, but still good to study. Screenshot this. Here's your macro view picture. We're just gonna wait for time now, right? 10:30. I preferably, I don't really even want to touch it the rest of the day. It's already pretty nasty. Yeah, starting to climb. Let's see if DXY is dumping off. DXY starting to dump off here. Now, if we close above that candle right there, that's your change in state, right? Now, we still have SMT at the lows again. So, I mean, preferably you want to see NQ catch up, 6 sister concept. climb all the way up to the buy side, or at least the AM high. It's also a pretty efficient price delivery up into the AM high, right? We have the gap was filled back. Let me remove some of this stuff now. Gap was filled back and forth, back and forth. We don't have, we should go with 5. No gap there, no gap there, 2, 1. So we could see speed. I'm watching this order block here if you want to hold that. But we could see speed all the way up to the AM high. That would be preferred, obviously. And we're holding the order block for the most part. I see. Oh, never mind. Study the 1 minute bisi as it turned to IPG. Also this RTH gap too. But that actually was your first. I see. Okay, so that's your first gap that doesn't actually form within the order block, but first gap that forms on the 1 minute closes below. Now he said technically that first gap that forms is a high probability trade setup, but preferably it's in the RTH gap. That's something I also want to study. We're supposed to actually look at that over on Saturday, but completely forgot about it. So a couple things supporting price. We got the bullish order block. We got the change in state over here. Right, consecutive down closing candles. This is now your, I guess, your true change in state. This order block down here holding. Change in state up there. So, like I said, we saw pretty efficient price delivery on all the time frames. So preferably we want to see speed above this high now. This is a propulsion block once we close above it, but speed above here all the way up to at least this last up closing candle. That's your rejection block technically, but I want to see just large 2 or 3 candles just popping up all to this short-term buy side. I'll screenshot this, actually share it to predictions chat too. Oh, so he already posted the execution video? That was quick. Oh yeah, study this bisi. So watch the speed. I also have this bullish order block here too. This propulsion block technically too. Who else do you follow besides ICT and AM trades? I think big people to follow if you want like solid traders or solid mentors. CJ Trades is also one. He does daily analysis. CJ Trades and ICT were the only 2 people I watched in the first like 6 months of my time learning and studying ICT. So CJ Trades has very it's all hindsight analysis. He's just started live streams. If you want to tune into his live streams, he's got some solid stuff. But CJ Trades, AM Trades, of course ICT himself. Market Maker Turbo also got some solid stuff. I'm trying to think who else, but those are the 4 off the top of my head I can think of. I'll have to go back to like my YouTube subs and see who I actually subscribe to. But those 4 itself, CJ Trades, I think if you want a daily kind of analysis from someone, CJ Trades in his higher time frame down to lower time frame structure, one of the best ones. Thoughts on DD inversions? I actually have not. I've seen the video pop up on my feed. Have not watched it yet. I actually don't like some of what he says. I feel like it's too, not clickbaity, but just too based on price action. just on the 1 minute, and there's I'm not gonna say anything because I haven't really watched the video, but just having a PD array by itself just makes it kind of seem like there's not everything all together to it. But something I have to study for sure. So I'm not gonna say it's reliable or unreliable off no data. Watch this gap. We're still kind of holding. This would be a reclaimed fair value gap. Never heard of them. Once we close above that sibi, I want to see speed. You can see a propulsion box holding, not tapping 50% of it yet. T-Trades is solid, yeah. He's more of like a concept guy, which I think if you want explanations of concepts and how to apply them, he's the first person you should go to. Although some of them are not as in depth as probably I would like to see them, but in terms of just the general basis and how to see them a little bit more in depth in ICT, teacher is the guy to go to for sure. Oh, trades for opportunity. He's got some old videos. He's the one who makes all these indicators. He's got some videos on self-discipline as well as CJ trades. If you scroll all the way back to like their old 2023 concepts, not concepts, but videos, they've got some good stuff in there. We're still holding this repulsion block, but we're bouncing between two PD rays, right? We got this reclaimed sibi and the repulsion block. Why? And we got a breaker in here too. Should be holding price up. ES just took out their highs, so we got to be careful now. Look at the SMT again. Like NQ and ES are not anywhere near each other. SMT at the highs, lows, another high SMT. CFDXY still dumping off. Oh, oh. And consolidation now. Still chopping around there. Propulsion block's somewhat holding. Like that wick down is really all you want to see. I don't want to see that low taken out. And the low's taken out. He just left very, very smooth highs up there. 1, 2, 3, 4, 5. And large candle there. Smashes all the way through. So that idea for me is nullified. We're just basically bouncing between nothing. And so normally on this, like there, I would be done. I would be done looking at the charts. You can see how quickly we're just displacing away with really no clean setup. Or, I mean, the reclaimed was holding to extend the reclaimed out. Right, but selling off super aggressively there. That's the kind of price action you want to see up there, right? Clean delivery. Now I'm expecting, since this gap here didn't get any buying through, we either close above it, put a candle body up, or if we close bearishly here, we'll see a wick into that again. as such. Watch. Close below. Watch the wick all the way to the premium end, preferably. Yeah, still didn't tap the hourly gap here. There's one wick. I want to see it all the way to premium end. Do have a fair value gap in here too. But you can see this is why we wait for time, right? If you look at 1010 to 1030, obviously it looks like we got a trade set up here, bounced off, displaced. Another SMT at the highs. Sat top 3 times again. Market not make any sense. I'm with you. But that's why I mean if you struggling with that, make sure you have a time-based model. So if there's something where you can take multiple trades, you're just looking for a market maker model, something like that, make sure you have a handwritten model and you can fit it. ICT says you can fit it on the back of a business card, right? So for me, time is what keeps me safe. So I have macros that I trade, right? 950, 1030, 1050. So if you're trading silver bullet, maybe it's only one silver bullet trade you're looking for. But like I said, that's why you have to have stop losses, right? So we had high probability setups, still got stopped out. Gotta reduce position size, keep all that stuff in mind. So watch, preferably I want to see this candle all the way up to the premium end. IO Fed, something like that. Element of time, I guess we got a 1020 reversal. We're just slightly off by like 4 minutes there, though. That's the problem I have. So we could see a 1030 continuation down. What time do you recommend? I would say, I mean, macros are kind of my thing. So, I mean, I can't recommend macros enough. But I think if you want like a solid thing to study, that probably most likely will give a setup every single day, at least 20 points. Study Silver Bullet. So between 10 a.m. and 11 a.m. specifically. A lot of days you'll see, almost every day you'll see a trade setup somewhere in between there. You just have to be careful by studying the news. But I mean, yeah, macros I think are solid because it's quick in and out. And then you have times where you're skipping because you know it's going to be low probability. But if you are studying Silver Bullet, I would say study the times that I'm showing you too. So maybe you're studying from 10 a.m. to 11 a.m. But look at the first 10 minutes, then this kind of middle section, and the last 10 minutes too. But again, like if you're trying to trade that many, like the first thing I'm thinking about is you may be trying to impose your will onto the market. So you get stopped out, you think you might see something when it's not really there, right? Which that's perfectly fine. It's something that's fixable, right? So when you go back, and this is why journaling is so important, because when you go back and journal it, don't leave out screenshots because it's hard to look at. That's what it should be painful, right? Like there's two different types of pains: the pain that alters or pain that hurts. Make sure this is the kind of pain that alters. So you want to screenshot it, you want to journal it, you want to make sure that when you're you're analyzing it later, okay, what was I entering off of? Was there 3 PD arrays that were going to support my stop loss? Was I entering too large where my stop loss is tight, where I can't let it run? Was there time based on my analysis? Was there maybe your entry pattern is fair value gap? That's what you prefer. Was there for value gap you were entering on, or was it just based on momentum? And then most importantly is how are you feeling throughout the trade? If you're feeling anxious, by the way, there's your wick all the way to the IFPG. That's good enough for me. If you want to sell off now, that's fine. But yeah, how were you feeling throughout the trade? Was it stressful watching it trade all the way up? Where you like all those things are very important, and your emotions are signs to yourself that you either should be reducing position size, or maybe if you're comfortable in it, then that's something that you can take, right? You have to be accepted, like accepting of the risk before you even place the trade. So as soon as you click buy or sell, that a lot, like the amount that you have on that stop loss should be, you shouldn't even bother. Like it should not even make you feel a different way if that stop loss is hit, if that makes sense. But yeah, a lot of times the reasons why you make the same mistakes over and over again is because you don't journal. And that's just sometimes the hard truth. So make sure you're journaling every single day, even if you don't take a trade, even if you break your rules, even if you do something good, like it's a perfect trade. No, I don't really have to journal this. This is something I would always take. You need to journal every single day you're trading. That should be just something you're doing as a trader. Now it can be a handwritten journal. I have both a handwritten journal and a Notion that I post screenshots of. I post a screenshot of the trade. I get my analysis of the trade. This is what I'm seeing. This is what hit take profit. This is what stop loss. How I got stopped out. What I would fix in the future. What I did right. Even if you did something stupid, like even if it was a trade that stopped you out, always have something that you wrote down that you said, okay, what did I do right in this trade? Because it'll boost your kind of mentality of the trade and hopefully give you some positive feedback and not just all negative. Going to head off the charts now and saves my mental energy. See you guys. I respect it. See you tomorrow, my man. Week's probably gonna be rough. Yeah, that's what I'm saying. I think Tuesday and Friday are really gonna be the only two that are gonna be any sort of interest, right? Because Wednesday we got FOMC, even though we have AM news. Like what? I'll still stream every single day, but I mean, it may or may not just be like we're just having a conversation the entire time. We're not even looking at price. We got 10:30 here. Now, preferably that last bisi, last sibi right here is held. If we don't see that, then I'm not interested at all. Price action between 1010 and 1020, isn't that a low probability retracement that we need some sort of confirmation before we consider a short? 1020. Like this retracement up here, yeah. Like I would not be shorting off this reclaimed. This sibi up here that I've outlined. By the way, we're trading all the way up. That reclaimed I would not be. I mean, just time itself is enough of an indication that I would not be trading, right? Because it's time and then price. So this retracement leg, this retracement and the sell-off, not interested at all. Even though we're, I guess, quote unquote, missing something, to me, we're not missing anything. Anything outside of these highlighted boxes is just noise to me. So yeah, it's low probability. Really the only reason you be trading anything in between here is if it's a continuation from the 10 a.m. reversal or something like that, or a continuation. A lot of times, if we have a retracement at 10, you'll see the take profit hit right at maybe 10 12 ish, and then retrace going into 1020. You see a reversal at 1020 like this, and then you get a reversal, or you get a market maker sell model going into 1030. That's in your flow chart. If you go to the 950 stage and day, right there, if you go to that, scroll up, click on the flow chart, and then you look at a lot of those pictures, you can see that there's a market maker model that forms with off a 1020 reversal, which is all based on what time, right? So if price is not doing specific things at specific times, low probability, right? So I mean, off the morning section alone, 9:30 Judas, that's good. That's what we want to see on a 9:30 true open, right? We don't have an 8:30 news, so this is treated as your true open of the day. We see 9:30 Judas, right? Spans up, gap. But then since we weren't displacing here, where we could, and once you get comfortable with it, you can anticipate what the times are going to do. By the way, we overfilled this slightly, and we're trading back down. it's not enough for me to look at going short. I want to see some sort of confirmation. I know we're displacing here, but yeah, we do have some multiple lows on here. AM low, obviously. We have opening range model too. Let's look at, okay, so ES is dumping off there. I like that. Sell side down here. Probably some pre-market sell side too. Yep. London lows of interest to me too. That's definitely a late screenshot, but those are pretty clear drawn liquidity. Go back to NQ. So if we can trade up, even tap into this, I'd be fine with that. But that would be your old selling, right? Could see just speed now all the way down. But yeah, watch this gap. Probably create some resistance. We have new week opening gap too if we want to target that. So, you know, gap there that just formed. If we hold that gap, that's preferred. So held the IPG, held that sibi we have marked out here. If you're looking for 20 points, that would be your model, right? So down to 20, potentially. Still not something that it's super high probability to me. But I mean, in terms of framework, it looks fine. We got 10-20 reversal. We got a tracement a little bit further than you want to see at 1030. But another IPG, that's one gap, two gaps lined up on top of each other. Once we displace through this, this would be your old selling. Trade through there. You don't want to see a candle body placed above here until the drawn liquidity is met, which should be the AM low and the 20 points. Not really drawn liquidity, but you know, a framework. Now we could see bounce out of this gap, which I'm expecting some sort of a trace. And we actually do have relative lows here too. Oh, that's your, never mind, that's your hourly premium end. Points is 23. Holding it well. Looks good to me. Also have this IPG on the 5-minute that held. Also an order block right here once we close below that. So a lot of stuff that should just propel us downwards. Watch that the old selling is closed below. Oh, I don't know ICT was actually live. I thought that was recording. Or I mean like a trade recap. Put an entry in the first PD rate above 50% of that range. Nice. That's actually beautiful. Right above that. Solidation. I like it. Right in premium. Caught a nice out on the sell side. Now he's clowning CME. Good on ICT. He's back to Twitter, I guess. Like, I don't know what happened there. We still have not closed below this, by the way, which is like your last confirmation we need to take out that swing low. So I'm watching that. No, you wouldn't be gone for good. That's true. Possible scenario, sure. We take the lows and have a retracement entry of 1050 to go to paint the sibi and new week opening gap below. It's possible, yeah. If you want to see, I mean, normally on an expansion day with New York, you want to see that low put in around 11, either 1030 or 11. Now, since we're not really displacing below this old selling, I don't really like this macro anymore. 1050 macro, yeah, you need to see displacement. But I don't really like the short, though, if we're in this discount for value gap, right? If we're looking at the hourly chart really quickly, this is the gap we have outlined right here. I don't like going short, although this is, I guess, the drawn liquidity down here from last week. Last week's low, the Tuesday low. I don't like, at least for a scalp, going short within this range, right? Need those shotgun Saturdays back. I know, man. Those Twitter spaces were something else. I do miss them. Yeah, he's just flexing, I think, before he starts Robins. Then he'll shut up again. But I think everyone wants him back. So still in consolidation range. This is a nasty morning session if you have not seen already. So we'll probably just go and wrap it up there. I don't really care too much 1050 macro, even if it plays out. It is what it is. So, yeah, trying to think what else. I really don't have a bias for the rest of the morning. Like I can see both sides of the market. We're still just like, look at this. This is all in the morning session. So preferably we take this out, the AM low. I don't know where my line went. There we go. Yeah, preferably we take that out, but yeah, Monday accumulation, right? That's why I didn't have a daily bias. That's why we didn't. Told you in the morning was going to be low probability. So, probably we dip into here, but it is what it is. Anyways, stream recording will be posted probably in the next 2 hours or so. So I appreciate all you guys coming out, even though it's low probability. Hopefully you're able to learn something about either the markets or psychology based. If you got any questions, feel free to shoot me a DM. Lord willing, I will see you guys tomorrow morning, same time for the stream with hopefully some better price action than this. So until I see you guys then, stay safe. Good luck, good trading. Peace.